The headline said unemployment went down. That sounds like good news, but 720,000 people just walked away from the job market, and that's the only reason the number dropped. Most people read the headline. Today, let's read the story underneath it. I am Ron Siegel, Certified Liability Advisor, helping families build wealth through strategic debt management. This is your weekend update for the week of July 2nd, 2026. Let's start with jobs because that was the big story of this week. The June jobs report came in soft. The economy added 57,000 jobs. The forecast was 110,000. So we landed at about half of what was expected, and it gets softer from there. The 2 months before were revised down by 74,000 jobs combined. That takes some of the shine off the strong reports we saw earlier this spring. Now the unemployment rate. On the surface, it looked good. It fell from 4.3% to 4.2%. But here's what most people miss. The household survey showed 507,000 job losses. So how does the rate go down while jobs are being lost? Because 720,000 people left the workforce entirely. When more people stop looking for work than lose their jobs, the rate can fall for the wrong reasons. This was one of those times. One more sign worth noting. Almost all the job growth came from private education and health services. Those jobs are usually budgeted far in advance, so they hold steady in good times and bad. Leisure and hospitality actually lost 61,000 jobs. Take out education and health, and the rest of the economy was slightly negative. So what does a soft jobs report mean for you and your clients? It matters because weak jobs data usually helps bonds, and mortgage rates follow bonds. This week was a tug of war. The end of the quarter brought heavy selling that pushed rates up. Then the soft jobs report gave bonds a little relief. Here's the number to watch. The 10-year Treasury yield is sitting near 4.46% as I record this. A week ago, it was 4.37%. The market is not closed yet, and the bond market closes early ahead of the holiday, so that number is still moving. Here are this week's average mortgage rates. The 30-year conventional is 6.65%. The 30-year jumbo is 6.8%. The 30-year FHA is 6.22%, and the 30-year VA is 6.24%. These are national averages from Mortgage News Daily, not an offer to lend. What about the Fed, and where do rates go from here? There's real debate going on. One voting member still wants to raise rates, but two things are pushing the other way. Oil dropped under $68 a barrel, and the national average for a gallon of gas is down to $3.83. Lower energy costs help cool inflation. The new Fed chair also appears more measured. He seems focused on the softening job market and on how technology may actually hold prices down over time. Here's a simple outlook. Expect the 10-year Treasury to stay in the range of about 4.25% to 4.55% in the near term. Not a straight line lower, but not running away higher either. Contained. And remember, strategy beats rate always. The clients who win are the ones with a plan, not the ones waiting for a perfect number. Now, a word about a client you probably know well, the self-employed borrower, the real estate investor, the business owner whose tax returns do not show the full picture of what they can truly afford and repay. We have a selection of loan programs built exactly for that person. This week, we're highlighting the DSCR loan. With a DSCR loan, the property and the income it generates can qualify the borrower. The tax return is not the whole story. You can send your client to rsrlinks.com/DSCR. That's rsrlinks.com/DSCR for the details. That ties right into our featured articles this week. You'll find these on the right side of your dashboard or below the video, depending on the device you're using. First, a loan is not good or bad. It's a tool. Most people use it wrong. Here's what nobody tells you about that perfect beach rental. A new home saves you $25,000 in 10 years. The move-in costs erase it. We'll show you the math. You can track your coffee order better than your budget, or actually you track your coffee order better than your budget. We'll show you the math there too. There are more on the dashboard as well. One more free resource to share. KeySteps is a free platform offering credit monitoring, identity theft protection, and household budgeting tools all in one place. Visit rsrlinks.com/keysteps. That's rsrlinks.com/keysteps to share it with a client. A quick look at next week. On Monday, we get the ISM services report, a good read on the largest part of the economy. On Wednesday, the Fed releases the minutes from its last meeting, which should tell us more about the rate debate. And on Thursday, we get existing home sales, a number every real estate professional will want to see. It is a lighter week because of the holiday, but those three are worth watching. That's your weekend update. This is July 4th weekend, so wishing everybody a happy and safe 4th of July and a happy 250th year for our country. We appreciate you listening, and we'll speak to you again next week.